Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on the show today?
Jim, we're going to talk about the financial shape of the junior resource sector and what's happening in the favorites collection.
So what kind of shape are the junior resources in?
The financing activity has not been at a level to properly replenish treasuries. I have processed most of the end of March 31st quarterly financial statements, so I have a good idea of what the working capital situation is of these juniors. And of the 1,092 resource juniors at our TSX Venture listings, 486 or 45% have less than no money. They have negative money. 15% or about 166 have working capital somewhere between $0 and $500,000. Not enough to do anything, so they're just limping along. If they have projects, they are maintaining them, keeping them alive, but they are in no position to do what this market insists on, which is, a fundamental change in the outlook for the project that the company is focused on. The sweet spot are the 39% that have, or 431 that have over $500,000 working capital. Now, ideally, you really want to be in a junior that has at least $1 million, and that allows you to at least get some sort of drill program going or some target development work. But for those that have less, it's a difficult situation. Now, my bottom fish index collection currently has 111 companies. I added one this past week. It's a junior that did a 2-for-1 rollback and then managed to raise $4.6 million working capital. It doesn't have a lot of stock out. It's a couple of people who've been very successful and have been sort of snoozing in semi-retirement, and they've got a couple of Nevada projects that they are very excited about. They think they figured out where more pipeline or Cortez Hills or Carlin type systems are located, except they're in the bottom fish collection because the missing piece is permits. They hope to get one for later this year for one project and one for next summer. But these are the kinds of stocks that are out there. Some are loading the treasury. Most are not able to do so. In terms of market trend, there has been a change since the start of this year. In June, we had a burst of value traded early June, and we've had another burst in the past week or so, going back to the start of January 2024. We're still not showing an uptrend either in volume traded or in value traded. That's a noticeable uptrend. So the general public is still, to a large degree, ignoring this sector. What we have seen, though, I have this system where I classify all the companies in different price brackets, like those that are below 10 cents, those between 10 and 20 cents, 20 and 29 cents. And every day when I crunch the data from all the activity for all these companies, I count the number of these companies in these different categories. In this case, it's the TSX and TSX Venture companies. And in early 2024, it was a bad period. There were 48% of them were trading below a dime. Today, it's 41.1%, and you can see a distinct improvement so far this year in the first half, which is almost over. The absolute worst was at the start of 2016, where there were 66.1% of the companies were trading below a dime. And we did have a decent rally in 2016 when gold started moving up. It got to about $1,500 before it failed and turned back. The odd thing about today, this year, is we have gold at $3,200 to $3,300, and this is a real price gain above and beyond inflation, and yet we are still not seeing the public moving into these companies. I just crunched the data for the financing activity. May was an absolutely abysmal month for raising money. It's still pretty low. It's now back to kind of what it was in the start of 2024. There was a bit of a spike in April, but now it has subsided. And of course, we're into the so-called summer doldrums where not much gets done. But the circumstances are still such that all it takes is some sort of spark to get people to start believing that $2,500 gold or higher is the new reality and start moving into the juniors. So with my database system, I'm able to figure out who has money, who doesn't. With the other resources, I can identify those companies with decent management, with interesting projects, and I put them onto my bottom fish list. And we're right now monitoring the bottom fishing list to see which ones are getting ready to lift off. This past week, for Kaiser Research members only, I published a tracker on Wolfden Resources Corp, which in mid-July will start drilling a high-stakes project. This could either be a million US down the toilet, or it could be the launch of a major discovery. And hopefully by end of August or even earlier, I'll be able to graduate Wolfden from the bottom fish collection into the favorites collection. In terms of putting it into historical perspective, in terms of money raised, what we have seen in the last while is still low compared to what we saw from the second half of 2020 until the sort of middle of 2022. That was a good fundraising boom for TSX Venture resource listings. The prior one was between 2010 and 2012 when gold had its first run to the $2,000. And of course, there was that great period, 2006 till the start of 2008, which was the China super cycle-driven feasibility demonstration cycle. Right now, we've got a small group of companies such as Vista Gold Corp, which have ounces in the ground, which the market is not yet taking seriously in terms of the current gold price. But most of the focus is on the more discovery, exploration-oriented companies, which makes sense because if your biggest fear is that gold's going back below $2,000, you don't want to be owning a stock whose ounces in the ground don't work at 2,000. You want to be owning a junior, say, such as a bottom fish like Wolfden, where if they hit 8-9 cent stock and they hit a Silicon Merlin type system such as Anglo Gold has in the southern part of Nevada, then you're off to the races and you get the S-curve dynamic action. And right now, S-curve action is limited to the company itself. So a good approach to have now is a portfolio that's balanced between ounce or pound in the ground projects, companies with those types of projects, and those with very interesting exploration targets that they have money in the bank and a permitted program to go drill. These are the two types of juniors that one should have exposure to right now.
Any new developments with the favorites collection?
The favorites collection has done surprisingly well. The bottom fish collection was up 50%, and that's for 111 companies. The favorites collection only has 24 companies in, and as of June 26th, yesterday, it was up 34% compared to gold up 27.1% for the year, and the TSX Venture Index up 21.9% for the year. By the time I do the write-up for this audio episode tonight and have all the data, the numbers will probably be lower because today my screen was pretty red for all the resource juniors. And the reason that's happening is because gold is suddenly in retreat. It had a bad day the day before, had a bad day today. And the reason seems to be that in the aftermath of the bunker buster bomb attack on the Iranian nuclear facilities and the declaration of a end of the 12-day war and peace coming for the Middle East, the gold had actually, even the week before, while Israel was bombing Iran, and Iran was firing missiles back. The GLD ETF, which most of the year has been sort of flat with lurches of accumulating ounces here, it actually had a string of multiple days where it accumulated ounces. But as soon as Trump declared that the war is over, mission accomplished, and oil tanked from being as high as $77 a barrel back to $65 a barrel, that's when you started to see an exodus of gold of investors from the GLD, and you start seeing the daily decline in GLD holdings. So, is this going to be a problem for gold? Well, probably not. There's two developments. Oh yes, the other development that may be hurting it today is that there's something called Section 899 in the Big Beautiful Bill, which has also been called a revenge tax, which proposes to tax gains made from American assets that are held by entities from foreign countries that the Trump administration deems to be discriminatory against the United States. And that seems to be about every nation based on the big reciprocal taxes that he announced on Liberation Day, that even included a tiny country called Lesotho, which happens to be the place where Levi's manufactures its jeans. This Section 899 may be something that Trump wasn't even aware about, but the media will have brought it to his attention in the past month as they realized the implication of this, because of the $36 trillion in U.S. government debt, about a third of it is owned by foreign entities. And there's already concern about America's ability to keep its debt from growing and even start paying it back. In fact, they just reported that during the second quarter, there was a $12 billion net outflow from American Treasury government bonds and long-dated government bonds and corporate bonds. And $12 billion is a drop in the bucket. But what is ominous about it is that in the prior 12 quarters, the average number was $20 billion of net inflow. And that's part of this whole American exceptionalism story, that America is the place you want to be. You have surplus capital, you have trade surpluses. What do you do with the money? You send it back to America. And that seems to be reversing itself. So what Trump has, as he figured out what this was all about, he has told Congress, get rid of that Section 899 provision. And one can say this is another taco. Trump always chickens out. But what he's saying is that this recent Group of Seven meeting, the Group of Seven countries agreed to get rid of this global minimum tax that the Biden administration had brokered, and it's intended. America will no longer apply to the United States. So this was this triumph, this reason to get rid of Section 899. But it doesn't really address the fact that there are other countries like China that own an awful lot of Treasury bills, $765 billion worth. But it is a way to just get rid of this provision, which was going to be a nightmare in terms of getting other countries to buy longer dated bonds as the U.S. refunds its existing debt. The trend right now is for the money to go into very short dated bonds, which are getting more than 4%. And Powell held steady. Said he's not going to drop it yet until he sees the full implications of the the tariffs if they happen. Now, the underlying reasons for gold to be strong remain intact. And of course, the frustrating thing for people like myself and our audience here who follow the resource juniors is that confidence that gold will not collapse back below $2,000 has yet to invade the junior resource sector. They're still just motoring along slightly better volume and value than they have been. The better ones are trending up modestly, but there's still no massive inrush of risk capital into this sector. Now there's two reasons to to be optimistic that that gold will remain strong. First of all, the reports that of mission accomplished, that the bunker buster bombs totally took out the enrichment facilities, and the 408 kilograms of uranium that had been enriched to 60% U-235. That may not be true. There was a defense intelligence report that somehow managed to leak out into the media that suggested that this has only set back Iran several months in terms of enriching to a weapons grade material. And the CIA has now come out, and this is such a wonderful, reliable resource. We remember their intelligence briefings from 2003 about all these weapons of mass destruction in Iraq, and they have declared, no, everything was destroyed. Yet later this week, it has come out from European intelligence groups that who have no propaganda reason to declare this a success, that, it appears that the Iranians managed to squirrel away much of that enriched uranium, and it's still sitting there. So it's uncertain that this peace will actually hold. The best hope for peace in the Middle East is that there is a spontaneous rebellion within Iran where the people finally rise up against the theocracy that took hold in 1979 and say, enough of this. We are a smart, intelligent people. We do like our Shiite religion, but we do not want everything to be under the thumb of Khomeini and his Revolutionary Guard. But the problem is with declarations or demands such as unconditional surrender from Trump, and the fact that the Israelis have been bombing the country with American assistance in terms of blocking any retaliation. This has ignited an intense sense of nationalism that overrides the desire to get rid of these theocrats and put Iran on a civilized track and allow it to flourish. So I'm not sure that for the moment there is any chance that this type of internal regime change will happen. And it certainly will not happen by sending in Israeli or American troops to try and change that. So the other thing is July 8th is when the 90-day pause on the Liberation Day reciprocal taxes expired, or tariffs expires. And the whole taco thinking these days is, well, Trump did get his 10% tariff to stick, and it hasn't caused the end of the world. Negotiations for trade deals do not happen overnight. These countries are not going to simply capitulate and say, "Oh yeah, well you are a big thug, and so you're going to say this." So our deal is that we accept that what you want, we do. They really can't do that because it'll destroy their own economies. Just take Lesotho as an example. So the expectation is that there will be another extension granted to give time to work out some sort of accommodation for the more egregious, unfair, trade relationships between the countries. But the problem is, Trump does not like that term taco. He calls it very, very nasty thing to say. And with his talking about, he'll think about what to do about Iran for 2 weeks, and then suddenly over the weekend, bombing it with his B-50, BB-2 delivered bunker buster bombs. He may just say, enough of this BS that I always chicken out. I'm going to make this stick. So if that happens, that will send gold soaring and probably the market back into a tailspin. The general equity markets have pretty much recovered everything they lost since Liberation Day, and the general assumption is that he's learned his lesson. He's going to do things gradually, make it work. It always was just a negotiation tactic. You shock and awe, say something extreme, and then settle for something more reasonable, but still better than what you started out with. So I'm optimistic that at a very minimum, gold will sit here and hold at 3,000. But even if it goes to below 2,500, that's still good for the resource juniors. And during the past week, I published updates on Substack for 3 favorites. One of them was Vista Gold. The first was basically a quantitative explanation of why, even at $2,500 gold, Vista Gold deserves to, be in the $5 to $10 range, awaiting acquisition by a mid-tier. And that really won't happen until they publish their smaller scale feasibility study for 15,000 ton per day scenario with a lower capex, which makes it palatable for a mid-tier to make a paper bid for the company. And and I also published the origin story that I had first published back in July last year when I'd crunched through the technical report and understood what a value proposal of Vista Gold's Mount Todd project actually is. I republished it for the Substack audience so that they can see what the background is. This has been almost a 20-year journey with $100 million spent to solve the problems that wrecked 2 mining attempts back in the 90s. The other one I did an update on was Solitario Resources Corp. Now, Vista Gold is my favorite advanced gold junior. The ounces in the ground that are permitted, it's waiting for somebody to acquire it and spend $1 billion, or if it's a smaller scale version, something below $500 million, to put this into production and turn it into a gold cash flow producing mine. Solitario is at the other end of the exploration development cycle. Its project is Golden Crest in South Dakota, and this is a brand new conceptual grassroots project. It's not a rethink of something that's been drilled to death before. Now we have a new model or type of situation. No, this is sort of a mirror image of the North Black Hills in South Dakota, which over 100 years produced over 90 million ounces of gold from various deposits, of which the main one was the Homestake deposit itself. So on June 19th, they announced that drilling has finally started, and the next day they announced that they had raised $4.5 million US at 63 cents from 2 investors. About a third of that went to Newmont, which is now just under 10%, and the remainder went to a new investor in the company, Wexford, which took the rest. So this story is attracting serious investors, and you might wonder, well, the stock's really done nothing all year. It's in the 60 to 70 cents US. Why would they raise money now? They have $5 million in the bank. But the thing is, we don't know what will happen over the next 2-3 months. And this round of drilling, it's limited by 3 extra holes per drill pad, and there's several of them that are allowed 4 holes. There's no guarantee that they will hit that discovery hole in the lower Deadwood that suddenly makes the market say, wow, now we're in discovery delineation mode. This is S-curve territory. We don't know how big this can get, so we're going to jump into it and trade it high. That may not happen. And so putting this money in the bank is a good idea, because there is now a possibility that they might be able to start drilling the Ponderosa part of that project. And because on that day, the company didn't announce it, but if you're monitoring the U.S. Forest Service site, you will see that on June 20th, the U.S. Forest Service started the 30-day comment period for the Ponderosa plan of operations. And the site estimates a decision sometime in September. Now, the decision could be no, or what could happen is they do an extension, they drag it out. And that's kind of important, because for Solitario to mobilize a drill rig to Ponderosa this year, it needs to know by the end of September that it has a permit to go ahead and do so. So we've got basically 3 months now of waiting, biting our nails, wondering if they'll get the permit. And it matters because the Ponderosa target, the surface values in soil and in rock samples, both for gold and the pathfinders, are much, much better than in the Golden Crest area, where they're basically drilling deeper targets under about 200-300 meters of pretty much worthless sediments that aren't good sponges for gold. But this area here, the intensity of mineralization at surface is unbelievable. So if they get at least 3 or 4 holes into this, all the way into the basement, which they estimate to be about only 300 meters deep in this area, they could end up having that super discovery hole, and they're applying for 47 sites within this area. So they will not have this problem in the Golden Crest, which are widely spaced targets that they did scout drilling on, and they drill and they're only allowed to drill 4 holes per platform, and the targets are sort of 300 to 400 meters deep, so you're pretty much limited. In the case of the Golden Crest, they'll have to apply for a modification, so that could be like next summer before they have approval to drill follow-up holes on anything there. So this is a big deal, but by September, we will have seen whether or not there are consequences of tariff-linked inflation. Who knows what will happen in the Middle East? Markets could be tanking. It could be very, very difficult to raise money for any juniors, regardless of how great their exploration results are. So they basically put the money in the bank just in case they get the green light to start drilling at Ponderosa. And we're in an environment where it's hard to raise money because of general market conditions. So Solitario is at the opposite end of the exploration development cycle. It has super blue sky potential. The last round of the Golden Crest drilling will go back to Buckhorn Flat, where they hit about just under a half meter of 11-gram gold last year. This was important because it was in a paleoplacer conglomerate at the unconformity between the 1.7 billion year old basement and the 400 million year old Paleozoic sediments. This came from something in the basement. They don't know what sort of style of deposit, but they're allowed to go in there with 3 holes. They have to guess which way to fan those holes. They may guess wrong. They may be still too far away. But there is an outside chance that they get super lucky and drill into the source, the bedrock source of this. And if it turns out to be banded iron formation, a Homestale style mineralization, that may not be the best part, but it validates the mirror image hypothesis that the southwestern part of the Black Hills has similar endowment as the 95 million ounce northern Black Hills area, where most of it has been mined out. So I did an update on Solitario with the milestone timeline, also showing how the S-curve action would happen if they deliver a $2 billion outcome that supports a $2 billion target. And if you only were to own 2 companies in the junior space, Vista Gold and Solitario, those are the ones. But I also updated on Endurance Gold Corp, and it's got a nice-looking chart, coming up from this 10-cent bottom where it was, and it's now at 20 cents. They published a press release this week from the first hole that they drilled, hole 109, and it didn't quite deliver what they were hoping for, but they got something unexpected, which is that the Imperial Zone, which seemed to be with hole 106 petering out in thickness at depth, in that 185-meter gap between hole 106 and the next interval, that intersection within that zone, they got a really good 21.8-meter interval of 6.74 gram per ton gold. They did intersect that Gabbro-hosted a zone in the footwall. They had some very high grade, but it was narrow. So the potential of that is probably down plunge rather than up plunge. So they're now moved the rig to drilling these boring shallow holes in the Crown Gap, which is the space between the Imperial and the Eagle Zone, where there has never been any historical work, but last year they drilled below that, got some fantastic visible gold intersections, and they are working on a resource estimate. They hope to have it ready by October. This would be just open pittable for the shallow portion. So right now they got the rig working there, drilling these shallow holes. They got 3 already in the bag. I don't know how many more they need to do to be able to do a resource estimate. What made this gap a gap was that at surface, it was pretty barren, not very interesting. But when they drill, they say, okay, well, it looks like sometimes this mineralization pulses and you get into a level where there's just nothing there. But it'll go a little deeper and suddenly it's there again. So that's what they're working on right now. And when they're done with that, they'll go and start drilling the so-called lower crown, which is the deeper part. And that's where one should start holding one's breath. But the main thing one should wait for is the resource estimate to see what it looks like. It's not the end of the story, which is what it usually is when you finally publish a resource estimate. This is for the open pittable portion. It'll show what the $10 million accomplished that they've already spent on this project. But the blue sky is still chasing this system down a couple thousand meters and finding ever better high-grade gold at depth. So Endurance Gold is the one that right now has the potential to come to life because the market just doesn't really appreciate that this project, which is already at discovery delineation stage, should be exhibiting S-curve dynamics. So this is one which could come to life right through the summer and carry on into the winter as we get a parade of results from this year's drilling.
John, thank you so much for the update and have a great Canada Day and July the 4th.
Thank you, Jim, and you too, and all our people in Canada and in America. Enjoy this holiday.
We've been speaking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.